This conference will now be recorded.
Good evening, ladies and gentlemen. This is TREASURY Trading Frank. It's approximately 8:33 p.m. Eastern Standard Time on September 29th, 2019. Welcome. This is a weekend, as we normally do, Sunday weekend strategic live webinar that is going to attempt to decipher a bunch of technical, fundamental, and political and economic forecasts on the upcoming week and a little bit beyond. On that note, full disclosure, this is purely for financial education, not for any solicitation or advice. The session will be recorded, uploaded as always to the Google YouTube channel for TREASURY Trading, which is available to all members, free trial subscribers, and with anybody out there with the internet connection who would like to get some nuggets of quote unquote real, factual, actionable resource, news, more importantly, technical forecasts on the Google YouTube channel on these strategic webinars, and not all the fake stuff that happens in the media and the noise that we're surrounded with every single day when we're operating in the financial markets. We have two great members, Dominic and Mike, here tonight, and I'm sure there'll be a few others who are going to be streaming in. It is absolutely a gorgeous evening out in the East Coast, and depending where you are, I mean, this is just unbelievable weather. So I don't blame anybody for not sitting there on their laptops or their iPads or their computers trying to figure out the dry stuff of forecasting financial markets. But this is what we do. This is what makes us money, and that's the reason why we do it. Okay, let's begin. So the biggest news over the weekend, which is a positive news, was that the U.S. Treasury Department did respond back to Bloomberg News, which had broken the news that the Trump administration was contemplating banning Chinese companies that are listed on the U.S. stock exchange. That is a dramatically DEFCON 5 type of action. And if that was true, right now, we would be seeing futures down 30 and collapsing. However, futures are up about 7 to 8 handles because the U.S. Treasury responded back to Bloomberg's query and said that they have no plans whatsoever at this time to, and you can see that right there. I saw the breaking news, brought a smile to my face. That the U.S. Treasury says no current plans to block Chinese listing. Back from our days on Wall Street, one of the things that was, in my opinion, abused by many Wall Street investment firms, especially the bigger ones as well as the smaller ones, but especially the smaller ones, medium to smaller size investment banks, because it is, after all, a big money generator to take a company, take it on a roadshow, and take it public. There are a lot of garbage Chinese companies hit our U.S. stock exchanges, made a lot of money for the smaller to mid-sized firms. The bigger ones like the Goldman Sachs, who took, and the Morgan Stanleys and those guys, who took Alibaba and NetEase and all these big JD.com, all the Chinese behemoths, the real companies. Those were listed. They go through a very stringent process of transparency. They have to conform to U.S. financial regulations, laws in their reporting. And but there was a lot of smaller ones, which came in as publicly listed IPOs or shell companies, which I don't want to get into right now, which I think is a complete fugazi, total scam. And a lot of the smaller investment banks and the medium-sized investment banks on Wall Street, not just on Wall Street, but across the country, they made a lot of money by taking those guys public. Those guys were making up numbers, doing all kinds of funky stuff. And these are not the Alibabas of the world, mind you. Okay, these are not the Baidus of the world, and these are not the JD.com of the world, and those type of large Chinese giants, which are far more transparent and their numbers overall are comply with U.S. reporting standards. These are a lot of small companies. So at some point, there's a lot of discussion, and this is nothing new, that the U.S. is going to basically, and rightfully so, in my opinion, clamp down and shut the pipeline of garbage small Chinese companies, which are with the assistance of U.S., American, primarily medium to small investment banks. We're making a lot of money off these companies by taking them public. At one point, they're going to clamp down, and that door is going to get shut. And that's fine. In fact, the real players on Wall Street and the investing public are going to be very happy, and it will have absolutely no repercussion on uh, uh, negative consequences to the U.S. stock market. Just keep that in mind. So they're two fundamentally different things, all right? Two fundamentally different things. Delisting established companies, case in point like Alibaba, out of the U.S. exchanges is an act of economic war in a huge way. It's like dropping a nuclear bomb or a JDAM over another country without declaring war. So it's not going to happen. I don't think the Trump administration. I'm sure there's probably some talk about it and stuff, but that's like if things really go to hell in a handbasket, that's the final straw, because that cuts off capital. That'll kill U.S. pension funds who are heavily invested in these fast-growing global behemoths, and it's going to hurt everybody, no question about it. But so I said it on Friday that expect announcements to come after the market closes on Friday or over the weekend. And lo and behold, it happened over the weekend. So that's just trying to figure out just my experience on being a lot of years on Wall Street and all kinds of stuff. I just trying to understand the dynamics of the game, the political game, and the economic game that's being played out. So that's it. So that's the piece of good news. And futures are a little bit relieved. Chinese markets should be opening up in about half an hour. And they are a very important administrative point. Chinese national, they have a 1-week national holiday celebrating the birth of China and stuff like that, modern China. So that their markets are going to be closed as of tomorrow. I mean, they're going to be open tonight, today, there's that there tomorrow, and then they're going to be closed for a week. And right after that, we have the Chinese trade delegation with the trade head. I can never pronounce his name right? I did well for about a week, and then Li Huao, I think I did it right. Anyway, they're going to be in Washington D.C. and hopefully hammering out some sort of interim deal. And I think the Trump administration is smart enough to realize that if that is a complete failure, and hopefully we see those signals prior to that the market is going to go to hell in a handbasket for a short time. No question about it, just so you all know. So, but that's October 10th. They're going to be here, I think, between October 10th, 11th, maybe the 12th. I don't know. So they're coming. And I think some good things might come out of that. There is going to be no absolute resolution. There is just going to be interim frameworks for deals. That's all. So on Friday, so getting back into the logistics of the market, you're seeing the market here since Sunday, the 30th. Sunday, the 30th. The first was Monday was the 2nd of September, right? 2nd of September. And we were closed for Labor Day, and then right after we opened 2nd of September. So you can see here the story, the technical visual picture of the market, and you can clearly see it's been one heck of a volatile ride. Yeah, we can structure it. We can put out. There was a very, very, very critical level here where I had a green line here too, because this is where the markets broke out of on after plummeting prior to that. There we go, right? So this was your breakout level right there. And that breakout level was a monster 400 to 500 point move on the Dow Jones Industrial Average. And this was at 9 in the evening on the 4th. And you can see that big, huge candle. So that's a major breakout line. And lo and behold, this is the way technical analysis works. This is the way algos operate, algorithmic high-frequency trading programs. This is the reason why we draw these charts ahead of the fact how much we can fall on any type of negative news, tweet, comments out of China, comments out of the White House, stuff like that. And lo and behold, look what happened. That's exactly where we went to. At Friday at 2 p.m., we hit, and the more you appreciate these things, the better off a trader you're going to be. Period. No question about it. No question about it. That's the only guarantee I can ever offer in life to all my subscribers, that if you follow charts, if you follow these structured charts that are delivered to you daily, all through the day, trading hours, then you will have a lesser chance of losing a lot of money and a bigger chance of making a lot of money. That's it. How you try to manage your trades and stuff, that's a different story. That's a learning process. On your own, most people cannot learn that. With the assistance of all these webinars, advanced coaching sessions, and the hours that I spend trying to help my members, you can get better at that. Because you could have a great profit, but the market can snatch it away from you in a second. And you all know that. We all deal with it. So the more you focus on the charts, the better off a trader you're going to be, the more money you're going to keep in your pocket, and the less you're going to give it away to the volatility and the machines in the market. So this was your huge breakout line, and this is exactly where we came to. And I've shown that in numerous charts. Now, if we broke this, then we have a lower level to contend with, and that's around sticky, around 29.20. And of course, we have our huge support level, which is around 2,900, right in this zone, right? And that's only if we break below these levels. Look, anything can happen between now and the market open tomorrow. Anything can happen after the market opens tomorrow. We could get comments out of the White House. We could get Brexit issues. We could have political, this impeachment drama that's getting played out, issues and stuff like that. So we have to watch these levels very carefully. The other piece of great news was, if you analyze it from a behavioral standpoint, that even after the rumors that the U.S. administration was looking to ban Chinese companies from listing here or delisting them and all that stuff, China didn't come back over the weekend with a vicious statement that this is a violation of international trading laws and blah, 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 all that stuff. They basically lent out a friendly hand and said, we are going to continue to open our markets. I didn't get a chance to put that tweet out there. Our markets, and make it more transparent for foreign investors to play in the Chinese economy and take advantage of their, booming economy. I mean, the booming population and all that stuff. So, and that was a good thing. So they basically did not play the tit for tat game, saying, oh, maybe it's a rumor, but hey, there wasn't no rumors coming out of China that they're looking to delist or restrict, I should say, U.S. companies from operating there. So that was a good thing. That was a good thing. So that was a friendly gesture. So that's it. So here is your major line, and that line is the breakout level. I put the support slightly below that, around 29.44 on the E-minis, approximately a few points, 3 or 4 points, when it comes to the S&P 500. And so this is the level we need to watch, because for whatever reason, if we do a U-turn, and we have done a lot of these lately, we have done a lot of these lately, right? Look at that. Looking all great, boom, flash crash. Looking all great, flash crash, flash crash, flash crash, flash crash, right? So that's why there's a big downtrend line. We need to break out over this in order to sweep up and go up towards that 3,000 and change level that the market made a high on. But that ain't going to happen without taking out these big downtrend lines. This is a big downtrend channel, and the lower end of this channel is around 29.40. Very easy to understand. This is a 1 hour chart, so it's cutting out the 15-minute type of crazy candle noise. So it's a little bit more of a swing chart, in my opinion. So that's it. And if we break this, there's going to be a flurry of stops taken out, limit sells and things like that, and you're going to see a panic move towards 2920 and then a move towards 2900. And these things can all happen within an hour or two. Not the first time, right? Not the first time. So we have to be very careful with that. And on that note, let me just put it this way. I have never been this exhausted in a long time dealing with and managing some very powerful trades, which are up within 15 minutes, 20 minutes, 3, 4, 5, 6, 8, 10 points. Those are the Amazons and the Teslas of the world. Tesla was a huge winner. And you'll know that. But just exhausted managing the trades. It's like you walk away from your screen and you come back and like, boom, something else. So believe me, it is exhausting. No one said trading is easy in life. Why would anyone give you free money? Think about it. I give out a lot of free, I don't give out free money, but put out trades which give you free money. So you got to take it. You got to manage it. If it goes up 200% and you got 50% out of it, that's fine. Because these markets are extreme volatility. And the biggest of the biggest players on Wall Street, ladies and gentlemen, cannot even trade the markets, and clueless trading is. And it's a fact. Now, I could walk away certain days and say, guys, sorry, no trading today. Great. You want to, remember, my business is to give you ideas and suggestions. Then you have your own ideas and suggestions. There's so many companies in the market, and go with it. So you don't always have to depend on me. My biggest strength here at Clueless Trading, and reminding all existing members and future members and free trial subscribers and everyone else who's going to listen, is that my charts are structured for ultimate perfection. So regardless of a 600-point drop or a 500-point move, you know the framework you're working on. In between, do some trading on your own. My goal here at Clueless Trading is not to make people 100% dependent on every suggestion or trade alert that comes. No, we're not a ditto trading service. I do a bunch of trades during the day on certain days that I don't even have time to post. I give enough ideas. So and I make money on those. They're fastest trade maybe. And then I sit on some of the trades for months. So the goal here at Clueless Trading, and please keep this in mind, is to make you all independent. Like that old saying, right? Teach a man to fish, then he'll eat forever. Or what? Isn't it something like that? Give a man a fish, he eats for a day, and teach a man to fish, or a woman to fish, whatever, and they have a living. So that's the whole thing. The goal is to make you all independent traders. Take some of my ideas, use my charts, because these are extremely precise in these very, very volatile markets, and go with it. Okay, that's it. So saying all that, this is what we're seeing on the 1 hour chart. Futures are up roughly 8.25. We have no idea where they're going to open up tomorrow morning. I've learned that lesson, repeatedly. This is a 1 hour chart. 1 hour charts are overall looking pretty good. You have the the fast stochastic, full stochastics, got deep oversold, hit that breakout line, right? And there's a breakout level, and below that is a very, very strong support, or a critical support. So it got oversold. Now it's bouncing. So far, technically looking good. Let's take a look at the MACD. The MACD basically there was a minor positive divergence, and that is because it's sloping higher. Many of you know by now, and it's pretty obvious. Markets went to pretty much the same level, or this one was actually slightly higher than what we were on Friday before the bounce. Actually, we bounced pretty hard on Friday, right? We were only down 70 points. I called it for all of you. And the SPY calls, 300 calls, 299 and 300 calls for October 4th. That's for next Friday. They were up on average, just so you know, on average, let's say the 299 calls, they were up from about 60 cents up. They closed around 80 cents. They were net the 300 call October for 300s. and the October 299s. I asked people to buy the 296 also. Generally speaking, anywhere from 25 to 45% just on that intraday bounce that started off around 2, 3 o'clock, and which I did explain very clearly that there was going to be a technical bounce. Watch out for the markets after 3, and it had started happening prior to that. So this was a positive divergence because we basically went to the same level, but the MACD got deep oversold. This was last Wednesday, and we went back below that level, yet the internals were sloping higher. That's known as a positive divergence. So I'm just going to put, I don't know why the mouse is not writing to that today. So positive div, that's what we call it, positive divergence. And when you generally see a positive divergence, you will have a reflex rally, which could end right when the market opens. I mean, futures are up 8. What if the futures open up 12? You know what they're going to do? They're going to start selling within the first 15 minutes, because by that time, we will most probably be attacking these 2 lines here. And let me broaden this, which are the downward sloping. I repeat, downward sloping 34 and 50 moving average on the 1-hour charts. See these lines? Now, for traders who want to keep more money in their pocket, managing the trades in a more timely manner during the day, you need to follow this yellow line. You can put that on your own screen too. Let me just highlight this, put it up there from the highs. Okay, so we're above 3,000 on the 13th of September, and then we went into a free fall. And so bottom line is the yellow line, which I use as a short-term, not just day trading, but a short-term directional change type of line, is the 5-day moving average. Some people say, hey, why don't you use the 9? Well, I use the 5 because there are 5 trading days in a week. So once this is starting to turn up, it also does a lot of back and forth, right? But once this started to turn up, it should support the futures going higher. And if we break above 2980, 2977, let's say we break by the close, we are at 2980. That means futures will be up 17 handles. It's going to look good, right? 17 handles. So all those Alibabas you bought and the spike calls you bought, you better be selling a whole bunch of them, because 17 handles means we're going to be hitting this red line here, which is the 50 SMA on the 1-hour charts, which is the mini version, shorter term version of the 50-day SMA. So right there, where the sell-off began, you expect to see the sell programs come in hard. So there's no wishing and hoping. We open up, anywhere beyond 10 handle, 10, the futures up 10, 12, you better be selling within the first couple of minutes, because the sell programs, given what the markets have been doing, are coming in. They're going to come in, and your profits are going to disappear within minutes. Doesn't matter whether it's a couple of $100, whether it's a couple of $1,000. So take that. Sit back, see what happens after 10 o'clock. 10:30 is generally the time, 10:30. By that time, the machines are going to be going back and forth, How many times have you seen Amazon open up 11 points and then within 15 minutes, it's negative? Is it any rhyme or reason? No. That is the world we live in, of high-frequency, algorithmic, high-frequency trading, HFT, black boxes, day trading like a monster. So if you want to beat them, follow these charts. If you want to beat them, take profits. Always sell gap up opens. So that's basically it. So here we are, 2980 is going to be a resistance. Now, best case scenario, I'm not saying at the open, but let's say we open at we open up 10, 15 points higher on the futures, and then the sell program comes in, but it seems like they're going to roll it higher. And of course, I start putting out the real-time charts. You can see and predict what's going on. I already put out my predictions in the form of the arrows and all that stuff, what levels we're at. And they might make a run. They might make a run to the 2990 level, which is massive resistance, because every single time it's hit this downtrend line, there has been, it's basically hit a wall. So why shouldn't it this time? Now we could get some, of course, it could be different. There could be another piece of real positive news coming out of, President Trump maybe tweets out that he's feeling good about this trade summit on October 10th. Boom, then the market breaks out, and then you got different levels to contend with. So that's where we are. That's where we are. I think I try to explain it as simply and as effectively as possible. Any of you have any quick questions, just feel free to ask me, but let me go through. So let's look at the daily chart. Now, interpretation of technical charts has something called cognitive bias. In simple English, it means the way you look at the world. Are you bullish or are you bearish? Are you an optimist or are you a pessimist? Remember, people say, oh, I'm a realist. There's no realist, okay? A realist is basically an optimist, a pessimist with wearing clothes of realism. Like, oh, I'm a realist. So what does a realist mean? That means that, I think the markets are going to crash because I'm real about this. I'm not making up things. Okay, great. They've been wrong about the pessimists and the realists have been wrong about the stock market since it bottomed on March 9th, 2009. That's March 9th, 2009, when we hit 666 on the S&P 500. Okay, where are we now? So the cognitive bias means the way you look at things. So same thing with technical charts. So I'm going to give you a very simple example. So when you look at this chart here, a bull will say, and we're not looking at the internals and stuff. We'll look at that in a few minutes. And this is very important because you can apply this to any stock that you're trading at. How many times do I get some DMs, direct messages, and some queries from members? Hey, this one's looking like a triple top. Is it triple top? Okay. Because they're looking at it like that. Because their mind is telling them to look at it like that. Or they'll say, hey, is that a head and shoulder? In fact, it's an inverse head and shoulder. But their mind wants to believe it's going to go down because the mind is a terrible trader. The mind wants you to lose money. Believe it or not, try it. Your mind always thinks you're going to lose money. How about getting into the market or a trade with a mindset that you're going to win money and make profits? You don't get into a trade by thinking, and this is very serious stuff. This is behavioral modification, or what we call behavioral calibration, mental calibration. Why don't you get into a trade thinking, how much am I going to make? Not how much am I going to lose? 99% of traders, retail traders, human traders in general, get into a trade with the bigger voice in their head saying, oh my God, I better be watching this really carefully because I don't want to lose that much. Well, how about thinking, how much am I going to make on the upside? It's a very difficult transition. And when traders have, the only way you can try create that transition in your mind, which will make you a better trader, is by being and trading these structurally precise tactical charts and trying to keep your emotions locked away. Now, it's very impossible to do. Come on, you cannot keep your emotions. This is real money you're trading with. You're not doing a paper trading here. So keep that in mind. It's the way you look at things. Same thing in life, same thing in trading. Now, sometimes the signals are way too obvious. And in times like this, the signals are mixed. So when a bull looks at this picture and says, nope, we are going to go higher. Why? So the bull goes, you know what? This is basically a sharp move higher. Yes, back and forth, but mostly green candles all the way from the beginning of September. And then we are having a couple of days where we're down like this. Hey, that's a bull flag. And a bull flag, as long as the supports hold this big breakout level that the market attempted 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, about 13 times, I believe. Scared the living daylights out of everybody. Kept on telling you all that there was a lots of positive divergences, lots of these MACDs telling us it's going to break out, and it broke out. And it broke out on the 5th of September. So after it broke out, now we're consolidating. So it's still a bull flag as long as it doesn't break too hard, too fast below this range. Now, given the speed of the markets, it can break below this range and then retest around 2904, 2905 on the E-minis, S&P 500, because these two blue lines are a channel. Upper end of the channel is nice, fat new highs on the market. Lower end of the channel is the 150-day moving average. That's why that number is in magenta. Okay, this line here, this one, that's your 100-day, 50-day moving average, and that is the lower end of this channel. This, if it breaks below that, then we're going to 2,800. That's a 600-point drop below the 2,900. Not 600, around 800 points from here to here. Can that happen? Sure. The negotiations bomb, and President Trump got really pissed off with what the Chinese are offering. And the Chinese basically said, that's it, we're leaving early. No dinners, no steaks, no nothing. We're going to drop 800 points. But that's after the 10th. That's towards the middle of the month when things get really volatile. So at this point, the bull's going to say, look, we came up really fast, really hard. 99.9% of traders missed it. That's a given, or at least 90% of traders did. Okay, so the institutions. And then we are creating a bull flag, which will keep the primary trend, which is higher, that it'll break out. That possibility is there. Some good negotiations, whatever. We're gonna get straight towards 30, 30, 30, 40. That's a very sweet move. Very sweet move. But before that, isn't it possible, given that this is a consolidation flag, technically nothing is wrong, that we come back and retest the 29.48, maybe slip it below that, and still remain within a bull flag consolidation? Absolutely. That's what bull flags do. I have a feeling that's probably what's going to happen. Why do I say that? In other words, that we are going to go a little bit higher at the open, maybe by Tuesday. Things happening very fast. And then we're going to drop. And that drop is going to bring us into the lower end of this Bollinger Band, which is 29.30. So we're going to drop around 300 plus points by Wednesday. It's not going to change the technical picture. It's going to give us an opportunity to buy. But that's a possibility. I'm giving you scenario one. Now, why do I think that? Well, one of the simplest ways that, which has been so effective to us, if you look at on the E-minis at least. Now, if we bust a move above that, then these lines are going to turn. But for now, with futures up about 8.25, and this is going to affect the Boeings of the world. This is going to affect a lot of stocks, right? Not the specialized stocks that we're trading, which are literally untouched in this market. And you know which ones they are. The GameStops, the MPCs making, short-term new highs, Marathon Petroleum, Tesla, Special Case, things like that. Seattle Genetics, nice fat move, calls doubled. We got into some cheaper ones. And it might pop up tomorrow because apparently over the weekend, their presentation was very, very good on Seattle Genetics at the ESMA. That's the European Medical Healthcare Conference. So let's see. There's always individual stocks which go the other way, like Ulta, things like that. But so bottom line is, this one hasn't finished what needs to be done, which is get deep oversold and then turn, because these are the ultimate buying opportunities where things get really cheap. So that's scenario two. Unless we break out and this thing turns from here, which it doesn't need to necessarily go below the relative strength index below 20. When things get really cheap, look at that. Every single time, this was the ultimate buying opportunity back on the October, December 24th, Christmas Eve massacre, when the markets dropped 600 points. Never has happened in U.S. history. Boom. And look what happened on the 26th. We all know that because we had already bought a few things on December 24th and the shortened day of trading, and then the market just went off like a rocket overall. right? So we're not there yet. No rocket science. If it turns from here, okay, we're going to see whether it's a bull flag breaking out right above that, or will it go and hit a roadblock around 2980 and then pull back, because that's what this bull flag is do. They go like this, right? And at that point, that gets oversold. But at this point, technically, there's a chance, 50-50 chance or more, that the markets will pull back after the initial pop-up. It can happen as early as tomorrow. The MACD is still a mixed picture because we'll see how fast this crossover down, which is generally negative, whether it develops into a full crash crossover down like it happened here back in August, hundreds of points, or is it something like this where it crossed over down and then it just took off? Look, crossed over down and then it went like this. Market pulled back, and this looks more like what's happening now. We're going to take a closer look in a minute. And then the market just took off for a whole bunch of days, and this one stayed up. So that's a possibility that it does that. Pattern recognition is key. You have to understand the dynamics of that, and I'm giving you the technical thesis of what can happen. So here, markets had a 4-day correction, 5, 1, 2, 3, 4, 5. As usual, everyone's freaking out. Things get really oversold, and I look at multiple charts, both the very advanced quad bar charts, what we call the algo HFT charts, which give me much precise signals, on the slow stochastics, what we call the estos, and then the full stochastics here on Thinkorswim, and then of course my other charts on investing.com, and I use TC2000. I use 4 different platforms. So bottom line is that this was an immense bull flag. In between, they were all this bull flags. Look at that. That was a 1,000-point day kind of thing, right? The day after Christmas. And then the bull flag resolves into a 5-day rundown instead of a 2-day rundown. So here I am, this is looking to me more of something like this than something like this. That's just my observation. But warning, this is an extremely volatile markets. It's moved by rumors, by actual tweets, by comments out of the Chinese, by Brexit news coming out of the UK, all kinds of stuff. Oh, and the political drama that's getting played out in Washington, D.C. So, any questions on what I just explained?
Not yet.
Okay, but everything made sense for the.
Absolutely.
Okay, sounds good. Feel free to stop me if anything gets confusing. So this is the bullish channel. The bullish channel can be engaged. We can fall as low as 2,900 or 2,890, right, on the lower end of the thing. If things break loose, a bear will say this. This is what this would be the bearish interpretation of looking. That's called cognitive bias. How do you look at the overall markets? I keep on looking at the longer term picture of the market, the monthly, the weekly, and they're still trending higher. So, and then I mixed it in with the political game theory of what's happening with the Chinese coming here on October 10th, the rumors that were false, all kinds of stuff. So I mix all of them together and then try to make a determination. So bottom line is, a bear will say, you know what? This is definitively a huge 1, 2, 3 triple top. And for now, it's a triple top. If you're looking at a very big picture is not going to make you any money. You try to short the market, how many times is that? And then the market goes up 300 points. How about all the bozos who try to short the market when it was down 200? Did you hear me screaming and shouting, you guys should short the market? No, because I knew something like that was going to happen. Better to be patient and buy the calls and be up 40% or 35% by the end of the day. Take that money home. Spend it on the weekend. Or just reinvest it on Monday. That's a smarter way of doing it. Right? So bigger picture is all fine and good, but you're not running $1 billion fund, all right? So, and neither am I. So let's try to keep our horses in check. Don't think like Ray Dalio or Warren Buffett and or Druckenmiller or these big shot, huge fund Tiger management guys or Elliott management guys. You know, they're running huge billions, like sick loads of money. Because using their strategy is not going to make you any money unless you just want to sit on something. We're talking from a trading perspective. Unless you want to sit on something for 5 years, that's a different story, right? So don't try to say, oh, you know, they're not trading right now, so I'm not going to trade. Okay, great. So I'm sure you got a sugar mommy or sugar daddy who's going to give you a lot of money every single day because I don't have one. My sugar daddy and sugar mommy is called the U.S. financial markets and tactical charts. All right, so wake up. So big picture is all fine and good, but you got to make money. So a bear will say, this is definitively dead. This is definitively a triple top. Okay, fine and good. I agree. Maybe it is. China deal doesn't work out. That's definitively a top. And that we're going to go down all the way down to the bottom of the pan. Okay, we're going to go to the bottom of the pan. So what do? Short every single rally when this is already telling you that we have a little bit more before we get deep, deep oversold? And I showed you these past patterns where the markets basically, you know, move up. So we're playing the technical picture in the middle. I can't sit here and tell you that we're going to get a 1,200 point drop on the Dow Jones Industrial Average. China deal completely blows up, yes. So that's the bearish version. Always looking at, you know, what can go wrong. Okay. So that's the market for you all. All right. That's the market. Let's take a look at the VIX on Thinkorswim. And what is the VIX doing? Well, the VIX goes up when the market goes down, and the VIX goes down when the market goes up. Right? And I show the VIX chart on the 1 hour on my from the quad things that are literally 90% correct. So a bear will look at this. I'm going to do the bullish and the bearish view, and the bear will look at this and say, look at this VIX. It's turning and it's going to go all the way to 25. I repeat, it can happen. China trade talks, they walk out early. Donald goes nuts on them. The Chinese go, you know, say, that's it. It was a waste of our time coming here. Remember, they're coming here. We're not going there. They're coming here. Then, yeah, where the VIX is going to go to 25, and we're going to be down 800,000 points. Yes, possible. However, the VIX is getting overbought. Not fully overbought yet, and we shall see. But the picture on the VIX, technically speaking, suggests that we will find a cap somewhere around 20 or 21. And we closed that around, the VIX closed where? The VIX closed at 17. So in other words, a 4-point bump on the VIX means we're going to be down 350 points or so, 400 points. And didn't I tell you that's possible by Wednesday? Exactly. So expect that from the VIX on the daily. And then the VIX gets seriously overbought, and then the market picks up and just runs. It's the way it happens. Now, let's take a shorter term picture as to what might happen over the next 24 to 48 hours. This is how the VIX closed at on Friday from the 1 hour perspective. I told you all that too. I showed this chart. Big sell program. Big sell programs that started at 3 p.m. Remember, the vol players, they call them vol, not volume, but volatility players, are run by a lot of systemic robotic machines, and there are funds which are dedicated to basically correlate. That's why correlation is so tight between what's going to happen on the front side of the market and what's happening with the VIX. So these guys were systematically selling starting 3 p.m. If you look at the full stochastic, same thing. Double top, starting to come down. Double top, started to come down. They normally last about 24 hours. That means the market will bump up for about 24 hours and boom, then back to pulling back on that consolidation channel I explained to you. So here's the VIX on the 1 hour. And that's the reason why the futures are up about 9 points right now. Now, the VIX, if you want to decipher it from a technical standpoint, and the VIX moves very dramatically, and it's much more of a geometric progression. In other words, it moves in multiples, boom, boom, big candles instead of arithmetic, which is more like Soft, it goes boom, bang, right? Just like panic in people's head, like, oh my God, it's over. Like, oh my God, this is good. Manic depressive. That's what the VIX is telling you. So this can be in my opinion, that's it. That's a W formation, and it's a double bottom. Now we got this pullback, and that pullback has a neckline breakout around 17. So the VIX, which closed at about 17.22, will find some support at these moving averages around 1629, 1649. And from this point, it'll attempt to bounce a little bit. That's when the market comes into profit taking. Just so you know. So I watch the VIX very, very carefully, obviously. But watching it too carefully is going to make you nuts because it moves around like crazy. The 15-minute VIX is a heck of a lot more choppy than the 1-hour VIX and the daily VIX that I just showed you. All right, let's talk stock. So one of the stocks that I recommended buying, and I was right on the actual thesis, let's hope the stock listens to us as well, was the dramatic drop in Alibaba because of this BS rumor that came out of Bloomberg. So the stock dropped pretty dramatically. So let's take a look at this stock here. Right? So the stock was on the 23rd. It was actually dropping from the 23rd, but then it was starting to move up, and it was up to 176. And I wasn't trading the Alibaba for a couple of days now. You know that. I saw this drop here. I said, I gotta buy this. These are your Bollinger Bands. Upper one is green, lower one is thing. Anytime you have a massive Bollinger overshoot, let's try to keep this simple. In other words, the Bollinger overshoots to the upside above the bands, like it did here back in May. It overshoots out of the Bollinger Band like it did here in August. It inevitably re-enters into the Bollinger Band. That's good for 3, 4, 5 points. From an option standpoint, that's good for 40%, 60%, 80%, 120% on your money. As traders, that's what we're looking at, ROI percentages. This one was one heck of a panic. This is your lower Bollinger, upper Bollinger. It just fell apart. And that happened in a lot of charts. That's what happened in capitulation type of sell programs. Boom, 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 boom. So once you get a Bollinger overshoot like that, it is almost a 99% probability that given a day or so, day or two, you are going to get back into the Bollinger. Well, getting back into the Bollinger, and I told people to buy Alibaba all the way from this level, 163. The clock closed at 165. I told people to buy it around 164, actually. Then it slipped more as the markets, kind of tumbled, and then it started to pull up. This is a daily chart. So net, it was one heck of a capitulation. Look at that volume. That volume was unheard of. 33 million shares. I bet you every mom and pop who are in Alibaba said, that's it, I'm getting out. Mutual funds are like, got to raise some money. Sell that stock because they're going to want that money. That's what happens with mutual funds, right? They don't trade during the day. They got to raise capital so that at the end of the day, they have that cash just in case they get cash calls from investors who are like, can you put my fund, this fund into a money market account? That's what they know. That's what they do. That's why ETFs sell a lot of stuff during weekdays and just push things down. And then they don't care what happens the next day because the market's up 300 points because they got to raise cash. So this was serious capitulation volume, serious. And the last time we saw capitulation volume like that, the stock went berserk. Now, if the China deal works out really great, Alibaba is going to go from 165 to the upper end of Bollinger, 153. And that, ladies and gentlemen, is 18 points. That's a lot. Is it possible? It sure is possible. Because this is one of the stalwarts. This is the benchmark for large cap Chinese profitable power companies. So I'm not even saying 183. That's like tripling, quadrupling your money. When was the last time you guys quadrupled your money? Well, I gave a lot of trades which actually quadrupled money on those cheap lottos. Some of you did, I know that because I hear from them. But that doesn't happen in one day. 4 points. It's going to find a major resistance at around 172, 173. That's fine with me. And if it continues and this turns around, because that capitulation volume, that panic, like see you later, Armageddon, caused Alibaba to go total bonkers, oversold with a slight movement up. And what happened every single time that the stock did that? Remember, most investors buy the stock after the big move is done. Well, this is your opportunity to buy it after the big move has not even started, to really get in at the bottom if this goes. So we shall see. There could be more terrible news. I mean, there could be all kinds of stuff. Like I said, I warn you, coming out on this U.S.-China trade deal. But so far, everyone's behaving. What more to say? I mean, that's it. But Bollinger overshoots, capitalize on that initial pop. And if you want to swing trade this baby, because this is turning, then swing trade it into the 10th of October, into next week. Let's take a look at what Alibaba looked like on a 15-minute basis. That's where the real like panic action, right? So this is what happened. So this is from the 23rd of September. Let's draw this out, ladies and gentlemen. This is a 15-minute chart. There's a big buy program, see, at 345. You can see that on your screen too. That was a big buy program. That was what 2 million shares. Bang. There was one big buy program actually right after it collapsed. Some smart money bought it right around here on this collapse, which was like that, the 163. It's too fast. You probably didn't even see it go there. I didn't. And then there was a huge buy program, could be a short covering buy program of 3 million shares. That's a lot. If you add up the bars, this looks pretty good. Lots of buyers. There's another huge buy program that came in at 115. So bottom line is that, and I'm just doing a back of the napkin type of calculation. Don't have time to like spend time like really structuring it out. So bottom line is that you could possibly get a $10 move on the stock. Can it happen by tomorrow? I don't think so. But $4 or $5, yeah. This is where it broke down. Unless there's more terrible stuff coming out on the U.S.-China trade deal, the stock should at least get back to the upper end of this range. That's it. That's a lot of money. That's a lot of money. Stock costs 10, you grew up like 230%. And I repeat, when was the last time somebody saw 230%? Even though I've given us a lot of trades which have done that in this type of market. All right. That's it. Any questions?
No.
All right.
Those October 4th calls were moving really fast. The price.
But trust me, Dom, it's the way these machines move. You wait 2 seconds, they move it up against you. I mean, they're nuts. They're nuts. It's like, that's why you don't want to go too heavy on the side, but you need to have a moderate position so that as the stock moves up $3, $4, $5, that you still see some real money on your P&L. You know what I'm saying? Because the worst feeling is, and it's happened to all of us, where we are kind of a little too cautious because of the crazy intense volatility. We buy too small a position on something, and then it goes up, bang, and we're like, wow, I should be making some nice change on that, but look, I just made a little bit, and it's not your fault because you didn't take a position size like that.
Of course.
So it's almost like a dance with the devil type of thing. Like you're dancing with these algo machines, which are devils. They don't care. They don't care if mom and pop's losing their fortune or their pensions or their 401k. They don't care. So these guys will just pummel the market back and forth. And basically make the average investors and a lot of retail traders who are not following these type of precision type of tactical charts to manage their trades, their brains are mush. So they put out things like, oh, it's I gotta buy the effing dip. Okay, great. There's gonna be another dip right there where your brain's gonna be like, pummeled. So you can't do that. So these machines are designed to make our brains mush, and of course they don't give a hoot about the average American, and how much money they're losing in the stock markets or not making in the market. How about that? Most people have actually not lost necessarily in the past 10 years. They've actually lost by not being in the market. And yeah, think about it for a minute, right? Because these stocks were a heck of a lot cheaper 10 years ago or 5 years ago, even 4 years ago. So that's what happens. But yeah, I'm telling you, this is very fast moving machines. All right. So guys, going to wrap up. Thank you for attending. Everyone else going to listen to it. I'm sure I try to explain things very effectively, very simply. Let's try to be, these are the cardinal rules I'm following in these type of deep, extreme oversold, not oversold, they're not extreme oversold, extreme volatile markets, which are basically monkeys on a hot tin roof, is position size is moderate. If I like something, which is like that MPC, which I have to show, which is just a beautiful trend higher, I am building big position size, buying time. Building big position size, buying time. That's it. This didn't even budge on the China side because they don't care. The business of Marathon Petroleum, look at the volume.
Wow.
In those days, people just followed price and volume, remember? So basically, if you follow just price and volume, dude, you're going to buy the crap out of this. Look at this surging magnitude. Not like me trying to scratch my head and say, oh, is it going to turn? No, it's just surging. So you got to read these signals because remember one thing about trading. The ones which look the best will scare the living daylights out of you the most because they look so good. But they are looking good for a reason. These are billions of dollars. These are millions of shares. And this is since Elliott Management came in. Since I asked you guys to buy it too. I told you to buy it at 90 cents, a dollar. They went to $2.30. That's 130% in 6 trading days. So all I'm saying is, without getting like too biased, this is a powerful chart. All I'm simply saying, you got major resistance at 65. And then if it breaks out, make your major resistance at 68. But for those $1 type of calls or a $1.75 type of calls, and then I bought the 65s also, which I told you guys to buy at around 70 cents, 80 cents, and they closed around there. And those were the ones I told people to buy on Friday after taking out profits on the 62 and a halves. Why? Because Marathon basically is at 62 and a half. So why just be in the money? Buy some a little bit out of the money. So bottom line is this. So this is restructuring play. Same thing with GameStop. Same thing with Taylor Brands. Same, and this is a big restructuring play. This is the type of name that gets mentioned on CNBC, on Kramer, Marathon Petroleum, serious stuff. So there you go. You got a massive W, which will, on a swing trade basis, by this, like I keep on saying, by middle of October or October 11th, just like don't go weekly, go more monthly type. It'll swing up here, and that's a lot of money. And if it pulls back, you buy it, as long as the chart structure doesn't change. Now, let me show you a weekly of this. This is your daily chart. And the weekly chart is, wow! Seriously, this is like, having a nice bulletproof bourbon, after a long day's work, and it feels good. Sit out there, watch the New York skyline, have a bulletproof bourbon, all right? Chilled. A little bit on the rocks, mind you. You don't want it neat. That's going to burn your freaking lungs out. Oops, sorry. But what I'm saying is, that's what you do. So this is your bulletproof bourbon, made in America. All right? Look at the size of that freaking candle. They're not kidding around. So here's the good news. The good news is it can push up towards 65. The bad news is after it hits close to this level, it's going to get a quick, sharp pullback. No question, because that's what inverse head and shoulders do. They pull back. Then they start their move higher, and it completes the first major net line around 69, and God knows where. Can the stock go to 85? Sure it can. On a massive breakup or something big. Does that happen in one day? No. So that's what I'm getting at. Now, we got in around these levels, and this is what it did on a week that the market tumbled and acted like it was on what's that thing? the guys in Florida were eating, and then they're eating people's ears. Bath salt, bath salt. Okay, so it's like the fucking algos are like bath salt. Okay, anyone doesn't know what bath salt is, or they think some fancy bath salt. I don't do bath salts in bathtubs. Okay, is it's like a serious, some sort of weird chemical drug made out of God knows what, and it's homemade too. Think about it. You can't blame the Chinese on that one. So basically, and people just went around eating. They became cannibals. So seriously, you guys know that, So basically, the same crap with algos. They're like cannibals. So in this cannibalistic type of market, this is what Marathon Petroleum did. Have a great night. Listen, guys, see you tomorrow. Let's make it happen. And let's wish the best for the United States of America. Let's hope the Chinese work out a practical deal. In this country, we're not haters. We want some fair systems. The Chinese are finally coming around to it, but we can't be just mouthing off like they didn't mean anything. Those guys are a global superpower, and many of our income, i.e. GDP, came from selling into China. So let's not forget that. All right. Yeah, remember those days? Like everything was, oh, how was your China business? Oh, it's going bonkers. Stock goes up $10. So, that's the way it works. All right. But anyway, have a good one. See you guys tomorrow. God bless.